Welcome to episode 47 of the 5-Minute Investor, the podcast where we break down stocks at the heart of two stories shaping your investing week. I'm Trevor Abbas.
And I'm Jonathan Brown. Each week, we bring one stock, one headline, and one reason investors should care.
This week, we're profiling two oil companies positioned to capitalize on rising energy demand driven by accelerating AI and data center development.
Look for part 2 next week, when we'll examine how solar companies are stepping up to the task.
Okay, John, which company has stood out to you?
On the oil side, I've been watching Baytex Energy Corp, BTE on the TSX.
And what is Baytex's story?
I just looked through Baytex's latest financial update, and the company has been busy in Calgary, selling U.S. assets, boosting its finances, growing its domestic business. They even talked about solid year-end reserves as well.
Well, that sounds very promising, but how has the stock responded?
BTE stock has climbed around 4% since this still new year began, and it's also trading around 40% higher now than where it was a year ago. Decent for a stock that has a market cap of just over 3.5 billion Canadian dollars.
We hear that the energy sector is supposedly declining, but Baytex is actually growing production?
It's true. The company says it's targeting 3 to 5% annual production growth this year, digging into a capital budget of 550 to 625 million Canadian. Baytex's production outlook also calls for as much as 69,000 barrels of oil a day. That's on average, with an expected 70,000 exit rate.
Okay, here's a question, John. Was Baytex's decision to sell its U.S. assets a good move?
It seems like it. When Baytex made that Eagle Ford sale back in November 2025, its stock price went up to 4.25 Canadian. It hasn't been lower since. It was sold for 3.2 billion Canadian, and the company said it used those funds on Canadian projects. Baytex has improved its sustaining break-even price at $52 a barrel. That's one of the strongest metrics in the mid-cap oil space, too. That means they can generate positive cash flow even if the oil markets soften, as they often do. On this topic, Trevor has another stock in this neighborhood to tell you all about.
Indeed, I do, John. I have my eye this week on Hemisphere Energy, ticker HME on the Venture Exchange, a heavy oil explorer and producer advancing high netback, long-life assets in Alberta in a prime position to benefit from AI energy demand.
Sounds nice. Where's this demand stemming from in the broadest sense?
According to the International Energy Agency, when it comes to powering the data centers at the heart of large language models, renewable energy will only get us about halfway to meeting this demand by 2030. This means fossil fuels will have to pick up the slack. Looking farther out, the IEA actually sees oil demand growing steadily through 2050, emphasizing the glacially slow nature of the energy transition.
So what's the kicker here from an investment perspective?
This dynamic places a premium on energy companies with vast, untapped reserves and proven production growth without losing sight of profitability, making them attractive partners to power our increasingly AI-reliant lives. Hemisphere Energy certainly fits the bill in this case, hosting 14.5 million barrels of oil equivalent proved and probable, valued at $393 million US before tax, more than twice the company's $200 million market cap, that's in Canadian dollars, while compounding production at 22% since 2018 and growing adjusted funds flow by 71% over the period. Net income has also trended upward in recent years.
So I got to know, just how has the Hemisphere stock reflected the underlying company's strong financials here?
With unbridled enthusiasm, I must say, yielding approximately a 670% return over the past 5 years, which is almost 9 times the TSX index's effort over the period, with leadership's expectation of further growth in 2026, suggesting that investors are in for a positive year ahead.
Now, I know that electricity generation is mostly reliant on renewables and natural gas these days. How does the Hemisphere's heavy oil fit in?
That's a good question, John. Though heavy oil is only a minor direct input for electricity generation, it is essential for petrochemicals used to build AI hardware, the gasoline, shipping fuel, and jet fuel required to transport it, as well as for large-scale industrial heating needs. Think boilers, furnaces, and steam turbines, all of which makes it a key contributor to the AI supply chain, heavy oil that is, as well as to the global industrial complex at large.
As always, you can find links to the articles from today's episode in the show notes and more investing insights on stockhouse.com.
And you can find the 5-Minute Investor on Spotify, YouTube, iHeartRadio, Podbean, Stockhouse, or wherever finer podcasts are found. This podcast is produced in partnership with Baytex Energy and Hemisphere Energy and is intended for informational purposes only. For full disclaimer information, visit themarketonline.ca/disclaimer.